Hello, hello. Anybody hear me? Check, check, check. Check, 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 check. Just want to make sure everyone can hear me all right. Just want to make sure everyone can hear me all right. If you guys have any questions during, just type it in the locker room or wherever. If you guys have any questions during, just type it in the locker room or wherever. If you guys have any questions during, just type it in the locker room or wherever. Hello. Okay. That's pretty weird. Alright, I think I got that figured out. I had my audio on my computer, checking to make sure this thing's working, so. Alright, I think I got that figured out. I had my audio on the Yeah, I'm gonna wait about 5 minutes and then we'll get started. I think everything is I don't know if it's my computer or what, but it's gonna be a little bit delayed, so the questions might come in after, like 30 seconds after I'm talking, but we'll get through it. shabby, huh? Alright, that should help. I just closed out the extra tabs and stuff, so I'm gonna go to the bathroom and then we'll get started. Maddie, when the video catches up, will you send me a text and let me know that you can hear it okay and everything? There's not too much like buzzing sounds or anything. Try to move my mic where it would pick my voice up and not the sound of my computer, so hopefully. We got 3 people watching. Okay, cool. Yeah, if you guys miss some of this, I'll also have it recorded and send you the recording, so you can just rewatch it and hopefully it all records well. But yeah, I'll just go ahead and start the recording and we yeah, okay. Alright. First off, I'd like to thank you guys for spending the time on your weekend to do this, but really I know some of you guys joined the stream the other day, but we're gonna go over it again in more of a structured, like I made it this presentation, so it's not just completely off the cuff, but we'll go ahead and get started. So first of all, just a little list of what we're gonna talk about. Intro to Fibs, setting up TradingView tools, how to draw a fib sequence, how I know when a fib invalidates my system, and then outside of that I'm going to show you guys another strategy with inside bars and how I trade those. So we'll just go ahead and get through the slideshow, and then I'll walk through the tools on TradingView and stuff. So first off, what is Fibonacci? It's a psychological natural pattern in which human nature behaves. I know you guys have probably heard this, and it's kind of funny. I mean, it appears everywhere in art and patterns and anything from like natural stuff like fruits and trees to the distance between your knuckles and your eyes, and like famous paintings like the Mona Lisa are all drawn to what is referred to as the golden ratio. And also in that things like brands like the Apple logo and a lot of these logos, you can look it up, and they're all in line with this same concept of perfect ratios, and for whatever reason they are appealing physically and theoretically. So how I like to think of it in trading is like we're all familiar with the trend patterns on charts, like a bear pennant or a pennant or a flag or a head and shoulders, and those are all simply an illustration of retracement in some manner or another, whether that's a larger time frame retracement that consolidates into a accumulation pattern and beyond that. So I'll kind of show you how that works out in trading. That's just the overall idea of what Fibonacci is. And if you followed along like within the last week, not every one of my, I guess, thesis was simply created from Fibonacci. It's a combination of things I've picked up along the way, but I am a pretty true believer of astrology and those patterns and how they also intertwine to our natural and psychological behaviors as humans. Because at the end of the day, I mean, it's as simple as humans are animals, and we all know that animals graze and hunt basically based on the patterns of the moon, and that does affect emotions. And for whatever reason, I mean, you can go back and look. If you look at probably like the last 3 Mercury retrograde cycles, I believe it was August, December, and then middle of March, ending this Monday. Actually, this cycle will be over. And so the thesis on my March projections and where those turning points were at was like a collective of those dates and their halfway points and the moon cycle and Gann angles as well, which I would probably have to spend another 90 minutes plus if there was interest in learning about GAN angles, but that's for another time. I think focusing on Fibonacci's will be good enough for today. So how and where does this apply? You can use it in day trades with short-dated options and futures. On Friday, I just got on a whim and decided to open up an eval, or two evaluations for prop firms, and I literally all I did was I bought the .707 fib and I entered the trade, and within an hour I was in $3,000 profit and passed 2 evals on 2 trades. So that just goes to show you, like, in chop especially, there's so much. I know a lot of people are scared of chop, but really chop is just retracements over and over. Like, you can see this pattern as a pennant, but it's all just retracements and fibs. So if you learn how to draw these, there's I guess you don't really have to be scared of the chop always. There's money to be made within that. So as you can see, this fib draw was simply a high to a low, and after that low was put in, I was looking for an entry short. And you can go in depth if, I don't know if you guys study like ICT and stuff, but you can see the previous 2 wicks within the fib draw, they got swept at the same time that it made a .707 retracement. This is the 10-minute time frame. The next candle failed to close or even wick above that, and then so typically my approach to it is I'll enter probably like 1/3 or half size position on the breach of the .618, and then if price continues, you can use other examples. Like in this example, it swept the equal highs right here. You have an equal high right here, and it swept that and got stuffed right at the 707. So I would add as soon as we swept these equal highs. I just added, and then you'll see later, to find your target, you then would just draw this low to this high, and you would get a new fib draw down here, and your target is the .618. So that's an example of like a scalp, but this really works for large time frames as well. And if you were in the room, I have an example somewhere in here of the larger time frame where I took a short with a very tight stop loss on futures at 20,533, and that was a large time frame 707. That happened to be 3 points from the local top, and currently we're trading 3,000 points lower than that on NQ. So that's for a single contract, that's $60,000 move, with a 20-point stop loss is $400 risk for I mean, you don't always see moves like that, but that just goes to show you on larger time frames it's very effective as well. So this is the same drawing we saw where we had the fib draw from this low, or sorry, this high to this low, and this was our entry. So then after that I would draw another manual fib draw from that low to that high, and this is what we're looking for. Look at, as soon as we tap the 618, we lost momentum. So especially in options contracts, you're gonna see that reflect a lot in your premium, just that momentum change. So really this is where you either trim a large amount or you're fully exited out of the position, and then your runners, you can get into the 707, and sometimes you'll get follow through. You'll see me talk about it later, but a 10-minute close beyond the 707, typically you'll see continuation. In this case, we just continue to chop. But so depending on your approach, you can utilize calendar draws on small time frames for scalps, weekly, bi-weekly expirations on larger time frames, and this is like just what I talked about right here. So does that make sense for you guys so far? Can you hear me? I guess I should say. I'm guessing you guys can hear me because you haven't said, "Yo, what are you talking about?" So yeah, this is the example I was talking about on NQ. This is an hourly chart, so much larger time frame. We picked the first high that hadn't been retraced yet. I switch between the 2-minute and the 10-minute during the trading day. 2-minute just gives me a better visualization of where maybe the fib draws, because sometimes like the larger time frame you get, you'll miss where there's already been retracements. Like in this case, it's pretty clear that price has never even retraced half of this move down, right? I don't even have to draw anything and I can see that. So this is our high, and then we got a low here. So as a swing trader, I'm not taking a swing trade. I want to go short, but I'm looking for an entry. So right here, you could start your swing short position, and then top it off when you see confirmation of the 707 working as resistance. So, but in this case, this is where I was saying I entered at 533. I mean, it's within 2 points of the 707 is where I took my entry, and I believe the high there was 536. So there was literally 3 points of drawdown on, we're talking about NQ, which moves, I mean, on some days 100 points in one candle. So 3 points of drawdown, and it was just straight flush ever since, really. I mean, you could have held that position until whenever. Like, I could still be holding this position. Unfortunately, it was taken on an eval account, and really your only goal is $3,000 profit. But on a live account, I mean, that's huge. And so as you can see, like we just discussed, to find your primary target, you make the counter draw here. So we take the low, and that high we put in at 536, and your target is the 0.618 primary target. And literally, I mean, you're chilling in this trade. I mean, filled the gap right here, consolidated a bit, and just flushed right down. That was basically an 800 point larger time frame trade right here. So pretty massive. So hopefully that's making sense. And then, I mean, you can see later price came back to retest that level, and eventually we just continued down. But pretty major. I mean, that goes to show you the power of these, when you can identify a trend. Like, obviously we're now in a downtrend, so I'll show you after we get through the slideshow. But you're looking for, right now I would be looking more for a bottom to put in for a rally, and then a target for that rally. And a lot of people are like, oh, we have to retrace back to all-time high. No, we don't, because there's minor retracements on like the hourly time frame that are gonna act as resistance, and we won't make it back to 50% back to all-time highs for a while, I can imagine. But so how does it invalidate? And this is a pretty good example because it goes to show you, like, yes, there was confluence here because we closed like right below the 707, and So in this scenario, yes, it invalidates, but it's still a profitable move, even if like you just have to follow your system. And my system is the 10-minute time frame. A close beyond that 707. I wouldn't take a long here because I would expect continuation down, but we didn't get that, which is fine. So on larger time frames, though, I've still been trying to, I guess, tweak the system a little bit and find out which time frame is most important, and it comes down to the daily close, because I've seen hourly closes below this, and it will reverse. I've seen 4-hour closes below this, and it will reverse. But I think ultimately, on a swing trade, you want to see a daily close below that to invalidate a bounce. So next, what is an inside bar? This is the Tesla 4-hour, and really it's just when a candle trades within the range of the previous candle. Mainly I like to trade inside days, but you can also use this on like the 4-hour and 30-minute approach. So this right here is an inside bar, and I'll kind of go in the next slide and show you. It does also invalidate, just like any other trading system. Nothing's perfect, but and then we followed again with another inside bar. So really you'll see that this giant bar that just swiped the high of this inside bar and the low of this inside bar was just shaking out both sides of the trade, which happens, right? So this is how I would approach that. This is that second inside bar that it printed. So really I'm expecting the move to happen now, and it did. So in your trading view, I'll show you this when we get done with the slideshow again, but what I would do is I would draw the short position and the long positions to find my targets. But so for the short example, your entry is the bottom wick of the candle that we're looking at, and your stop loss is the top of the wick. And so you see this is the daily close, and then the next day we gap down. And so ideally, if I'm still looking at this trade, I'm looking for a retest and confirmation of the breakdown of the low of this candle, and we pretty much got that. I mean, it's probably within a couple pennies, and then you can feel confident with entering. But to find your target for the trade, you can do different things, but you'll see when you adjust this green area, this risk-reward ratio will change, and in a lot of cases you can get 5 RR on these trades, but if you want to be more conservative, you just put it at like 1 or something, right? So that's how I do it. And then on the flip side, if you wanted to do a long position, right, this would all be inversed. The breach of the upper wick would be your entry, or if you want to be more safe about it, you can wait for a breach and retest confirmation, and then obviously your stop loss would be the lower part, and your take profit would be a 1.5 or 1 risk to reward ratio. So hopefully that makes sense. I will go through how I do that in TradingView as well here. And I know that the stream is probably like 30 seconds to a minute behind, but I'll just give like 5 minutes for any questions for those tuning in. when I hop over to TradingView again on this recording, I will pause and show you my settings for the fib retracement tool. I really simplified it a lot. I just have the 0.618 and 0.707. I just leave everything off there because I found it's just noise, and unless it's trading within that 0.618 to 0.707 ratio, it just doesn't really interest me. But I don't see any questions, so I'm just going to continue here to TradingView. Yeah, and I don't know if you guys are still watching this live or not, but I will have the recording again for you guys. So one thing that I find important to notify is when you're making these fib draws. Wow. Okay. The daily time frame does not show you everything, especially on like SPY and QQQ. So I found that you really want to, well, you really want to be on like the 12-hour or 24-hour, 4-hour or something out here, because it doesn't get the extended trading hours. Wow, this thing is lagging, isn't it? My computer's not really built to just stream, but we'll figure this out eventually. Okay, yeah, let me look at, yeah, I highly recommend TradingView. I know that Thinkorswim has a pretty neat thing going on, but I really like TradingView and the tools. So you said affirm. You're looking at the 4-hour here. Yeah, this is a pretty sick setup here. I mean, personally, I'm looking at this and sometimes this gives me FOMO because I don't identify these until after the close sometimes. So I mean, conservatively, right, you can do the risk to reward one, and you'll see, I mean, if you put that on your chart, the chances of that hitting are pretty good. I mean, you don't even run into any of this prior support turned to resistance. So I mean, that's how you can kind of gauge sometimes. And again, that's the I use the long position tool, which is over here under forecasting and measurement tools, and I just add it to my little bar so that I got it here. But you can see I had the 1, and then this is the 1.5. So I mean, maybe you put both of these up, and this is your area to trim, and this is your like TP 2 and 3, right? Because as you can see, price is probably going to slow up before it gets here. And then, so you have those targets. Oh, whoops. And then I have these settings, and my templates, it's just like the same stuff. And you can do that. I think I had to add these on my phone, but really you just put like an emoji in here, and then it appears over here, and you'll just save as, and then it'll be there for future. But anyways, so now if we're looking at this trade, now we can kind of break it down a little more and look at the fibs, right? So this is probably going to be our main focus here with the fib retracement tool, and I have the magnet on. Yeah, I mean, this just, if I made this fib draw and I was taking this trade, I think this one risk to reward ratio would be a very very high confidence trade if you're looking along this. As far as entry, this is how sometimes I would find entry here. So let's say we open up flat or slightly negative. This is a possible retracement area for entry right here. Which is a little exacerbated. I mean, that's a $2.50 retracement. So at that point, maybe it's not a good trade, but you can see how price reacts. I mean, regardless, if it does bounce there, if you don't get in here, that's fine, but maybe look for buyers to step in here. If the overall market's selling, right, we can just use that kind of stuff. I mean, this is just how pre-market you can kind of plan for this stuff. So maybe we do gap up. Yeah, 4 hour, okay. But this is just kind of how I'll visualize a trade. Like, let's say price opens up here and then finds support. Like, you can just kind of use these retracements as a guide. Like, price is probably going to bounce somewhere in between here, and that's kind of we're trading wide range right now, so it's kind of hard to tell, but I would just, if I was looking at this on Monday, I would just have these levels up, right? And then go from there. I really like this tool, the ATR levels. It's free, you can add them, and I will just show you guys my settings for the retracement and this as well. So I just have this one as red, because I usually, if you get a 10-minute close below this, chances are you find the first white target. So it's red, green, white, white, and then the only other things you want to make sure is you're trading the daily. This has other options, but the daily, and then make sure you have use current close on. So like after market close, you can pull these out, and then like if you've ever seen my charts, you'll see that I have these lines on them, and that's where I gather those. And honestly, like this is what you want to see. Like when the standard deviations match up with the fibs, it's usually price is going to find its way there eventually. So yeah, maybe it does retrace here, which would be a pretty good entry to take. I mean, there's going to be support here, and then again here, price may not even make it to this breakout level because it's going to run into it's going to run into a 0.618 retracement from this high first. So ideally you would look for an open here, and then again this fib draw wouldn't be valid anymore. You'd have to go find the new high, which is there, and then you look for support. So this could be an entry, and you need to keep in mind, like, obviously what IWM is doing and the strength of the overall market. But yeah, the fact that this target level for the standard deviation is within what this retracement would be, I would probably chill and wait until a firm is trading at like under 33.11 personally. So that's just how I would approach that. And then I said I'd show you guys the fib retracement tool right here. This is literally all I have. And I think a lot of people will have like this color on here. I just turn it off because it doesn't help you. So you just turn that off. You'll have to add this in manually, the 707, because usually it's 786, and to be honest, that's why I find my system better than others. Is in the past the 0.5 to 0.618 zone was your golden zone, but if you're buying in that zone, chances are you're getting smoked. The better RR entry is waiting for the 618 to hit, and then using the 707 as your backbone or your invalidation level. So yeah, that was for a firm. If you have any other things you're looking at that you tried to make a fib draw for, but I'm gonna go over kind of the big picture of NQ here, because I think this is a pretty good example. I mean, price just wants to find discount, and this is discount. Okay, so, and you'll see here I don't have this low at this low, and that's because in the fib sequence you need to find a low that hasn't been retraced, and you'll see what I mean here in a second. After this loads, I swear, like when I'm trading, my charts aren't usually like this. It's because I'm streaming, but it'll load eventually. Maybe it won't. But yeah, do you guys have any more? Did I leave that? How long has this been going on? Let's see if we can just reload this page. Oh, there we go. Okay. Okay, when you zoom into this, I can see, so this is obviously the low, but we want to see if it's already been retraced at some point. So you draw a low to a high, and it already retraced the 618. So as soon as I see that, I do not care about this low. Now I want to see if this low's been retraced, right? So again, you take your tool and you go from that low to a high, and this one also got retraced, so we get rid of it and we check this low, and you can already see it's already almost breached that. So that low, all these lows have already been retraced, they've already been checked. Now in my opinion, since you can just tell this, I mean, we haven't traded this price range since. And I mean, it makes sense because if you just follow what price was doing at the time, this is back in October 2023 when we were making Yellen, I forgot what happened, but major policy changes, and we just haven't, I mean, we haven't looked back since. And finally, a year and a half later, we're finally starting to make retracements. I mean, I guess I see things from a different perspective, but everyone thinks the market is crashing and the world's ending, but this literally had to happen eventually, right? And hopefully we don't get too far gone, because I mean, after this invalidates, this is going to be our next low that we go to, and then after that, it's this one. Oh, sorry. Alright, well, this is not working, so. Alright, well. Anyways, you can see what I'm saying. Like, we're going to retrace low after low after low until price finds discount. And I don't know what's going on with this. Oh, there we go. Cool. But anyways, you can see that low that we found. I mean, come on. This is not an accident, guys. If you start looking at the market from the perspective of premium and discount, I think things will become a lot more simplified for you guys. This is premium. You're trading premium, and I mean, you can see it in the reflection of the prices of these stocks. I mean, we are trading at insane evaluations. So doesn't matter how the market does it, but it's going to find a way to find discount so that we can go find premium again. That's how money's made. That's literally all the market is you find discount and you create premium. You find discount, you create premium. And we ran out of, I mean, we just ran out. There's no more premium up here. It already was, shit wasn't even making sense back in the middle of 2024. So whatever the world leaders are doing, it's all just a byproduct of the economy, the U.S. economy finding discount. And you can, I mean, this is just, you can see where we bottomed out, right? So I would not be surprised if we just gap up on Monday. I really wouldn't. I don't know what kind of news we're gonna get over the weekend, but we already dipped into discount, so we can go and find premium. And to find out a reasonable target, I mean, you can start. This is a massive trade opportunity, right? This most recent high to our low, that is almost 1,000 points, and that's not asking much compared to how much we've dropped. So you can start there, and then once again you just find your high, and then that's your next level, and then your next level. Like, we're just gonna, we'll probably bounce straight up here. Like, that's how this shit works. And then depending on how strong things are, like, I don't know, maybe we don't maybe we don't continue down until we start trading this area here. Right. And then, who knows, maybe this is like, I mean, this, I will sit on charts and just draw these things out because, I mean, you can see what this would look like, and then you find retracement here, and maybe that's it. Maybe we already found bottom, or in another scenario, maybe we go find that next lower retracement, right? You just have to listen to price. But yeah, guys, that's kind of what I wanted to show you guys with Fibs and how to visualize this. And really, it's just, this helps me so much not panicking. And how long have we been rolling for? 42 minutes? Yeah, I got time. I'm going to show you guys, clear everything out and show you how to find the yearly fixed range volume profiles, because I think this is interesting. This will show you that maybe we will continue lower, and I'll show you, I pay for this indicator package, but this will at least you'll be able to see what it looks like, and then I'll show you how to draw it on your own. And I also have a discount if you guys are interested in this. It saves me literally at least 2 hours a day. So all this is it took the first day of 2024 all the way back here, and it drew a volume profile to the high all the way to December 31st of 2024. And so when the new year starts, you have these fib levels. I mean, we were already trading, and these are, Aussies are, the maker of this, they're all named because he created it. It's his product, and he owns it. But these are all just fibs, and this is a verbal representation of what the Fibonacci's are. So your fair value high reflects to a 0.618 or a 0.236 is all this is. Like, it's just these, right? So this would be your fair value high, and it's when that is typically, let's say we're trading down and we breach the fair value low, the negative 2.36. On a large trend-based fib draw, you're probably going to get downside target 1. Chances are you will. So the range in between the 0.236s, which in this indicator is the fair value high and the fair value low. This is fair value. We sliced right through fair value, which tells me we're probably, price is either going to retest fair value or it's going to go straight to fair value low. And hopefully buyers step in there and we can maybe rally back to fair value high. But this is typically, I mean, on a smaller time frame, this is a no trade zone. You want to wait until, let's say you're looking at equities. I wouldn't buy equities until we know that the fair value low is respected, because you'll be able to get a profitable bounce on equities if we don't break down here, because chances are you're going to bounce to here, chop around, bounce to here, and then if this breaks out, we're headed back to all-time highs. But this is just a visual representation of this. I mean, we're just floating in free fall mode right now, so we'll see how Monday opens, but these levels are, especially in this volatility, they're going to just act like magnets. Okay, so, and then, I mean, you just have to combine everything, and you'll get a better picture of what the market is trying to do. But I'll go ahead and show you guys how to draw this. Hopefully it loads for us. So we need to find, first of all-time high. So within the yearly fib draw, you're looking for the high of that time period, which was right at the end of the year, and then you want to find the low. I can't believe this is so slow and choppy. I'm sorry, but okay, while this loads, the tools we're going to be using is the fixed range volume profile to find, and that will give us a point of control, or the POC. We'll use the trend-based fib extension. And it looks like this is just too much data for my computer to handle while we stream, so there we go. Okay. So we'll just do this a shortcut way. I like to go down smaller time frames, and it will show you a little bit more. But so we marked out the yearly high. And in January, we'll mark out the low. And then I'm going to remove this magnet because now we're just going to go with the fixed range volume profile. On the x-axis, we want to be at this low, and the y-axis we want to be at the first day of the year, which the first trading day was January 2nd. And then you come to your high over here on the 31st. Okay, and so this will give you a volume profile. I mean, you can use this as fixed range volume profile. I have it on delta, which are these green and red bars. You can change it up. I prefer delta and 70 on this. And then if you want it at your current price, yeah, okay, you'll do that. And then next, you will use the trend-based fib extension tool. And it doesn't matter where you're at or what date you're on. You just care about the low and the high, and then your third input is this red line, which is your point of control. Okay, so we can actually clear that off now because we have the fib draw we want here in the orange, right? So I mean, this is what I was saying, like this this indicator I use, instead of doing that for every stock, it just does it for you automatically. And honestly, because there's yearly fibs, there's quarterly fibs, there's monthly fibs, there's weekly fibs, there's daily fibs, and then there's also a strategy that uses the first hour of price range to draw a trend-based fib, and it all the levels react at some point. Obviously, the larger time frame ones are more of a confluence, but you'll see the yearly draw right here. If I pull it up, all my stuff aligns with those numbers, right? So like I said, the fair value high is the 0.236. You can see this thing just automatically does it, and you can do it for any chart. So let's go ahead and pull up a firm like we were looking at earlier. And you can see it doesn't look like it wants to break down anymore, at least before it finds premium. So you can see the general area of the fair value low, the breakdown pivot, where we would have explored this price area. It was respected in a big way. I mean, you can see when we got within 20 cents of that, there was already buyers here, and those are all algorithmic based. This is how the algos trade. I know it sounds crazy, but they know that this is a discounted level, so there's buyers here, and you can see the reaction. I mean, this is actually a beautiful daily candle, and I would expect this to go higher. I don't know, it'd be kind of cool if we gapped up over this lower gap and then maybe filled it to the downside before continuing, but either way, I think the picture this is painting aligns pretty well with Fed policy and what we might expect, some monetary or fiscal backing. It all kind of makes sense with each other, right? So who knows, by June maybe we're testing this fair value high up here, all the way up at $54. And as you can see, also, like, this is not a coincidence. All last year's price range paints a picture for this year, and I mean, it's crazy, but it's almost like everything's already been decided. When you start to really study these things and understand them, I think it's pretty cool. But the last thing I want to say about this, the fair value is the point of control. So honestly, as long as we are trading below the fair value, sellers are in control. And so that changed on Thursday. Buyers were in control until fair value and point of control broke down, and now sellers are in control. Buyers are going to have to get it back above this fair value level, also the point of control level, in order to regain control. So I think that's enough information today, at least for this class. I don't know if we're going to do more, but I hope you guys enjoyed, and if you have any questions, just shoot me a message or whatnot, and have a great weekend.